Let's welcome on board Sanjiv Bhasin and talk about what he's feeling about the markets right now. Sanjiv, much unlike Delhi morning, firstly, here in Mumbai today as well, we have quite a bit of foggy morning, but the fog seems to have completely cleared out for the markets, less than 100 points, and we should make it to an all-time high.
Yeah, good morning, Aisha. So, yes, fingers crossed, the best month for both the Dow of the year and for the Nifty. I mean, where have you seen such a month? And it finishes with a flourish with more to go. So I think, the pessimism from last week of October got overdone. And that is where you had to be a little bit brave-hearted and realize that you were headed for the best month of November. And we've been repeatedly saying, and if you've been watching ET now, then you've been, you'll be laughing your way to the bank. You are right on the fog. Delhi has cleared and there is no embargo on traffic now. So superb weather and cheers to Bombay and cheers to a new high, which is very much on the cards today. But more than that, it is the broader market which is making all-time highs. And that is where people are missing the wood for the trees.
Yes, so Sanjiv, who better than you to guide our viewers as to how to make best use of this rally right now in the broader markets, which refuses to abate. Give us 3 stock ideas where you think one can still buy and make money in mid and small caps.
So Aisha, like I said, now the dumb money which was left on the sidelines, I mean, I don't categorically call that dumb because foreigners generally sell low and buy high. And that is what the adage is. So if you have been a trader, this is a good time to book profit and go on an early vacation. But if you are still there, then some of the banks are looking extremely good. Federal Bank would be my top pick over there. This 146, 147 consolidation may play out. Midcaps, in the midcap earnings, because of their presence and increase in the gold loan basket, their NIMs are at the highest ever. So I'm very, very bullish on Federal Bank. I think 160, 165 is very much on the card. Second would be PNB. I think PNB arguably came out with the best results along with CanBank in the PSU space. And at 77, 78, again, it gives you an offering of going to new highs closer to 85. My third pick is a slightly name which I've been tracking for some time and I have a vested interest. Let me make a disclosure, is SW Solar. There was talk and, unambiguity because of a cost overrun or a delay in bank guarantee which got encashed overseas, and the old promoter, that is the Shapoorji Pallonji, had to make good the indemnity. They were up till 30th November, and today there is clarification that they have cleared all that. They have cleared the indemnity and there is no pending of the bank dues. The company has a debt of 1,000 crore for which they are raising capital, but look at the order flow. They have just recently announced a deal which is in the making for $2.5 billion on solar panel servicing with Nigeria. There has not been a single order yet from the parent group, that is Reliance Energy, which is looking at 35 gigawatts. So if you have the patience that in the next 2 years, this stock is a doubler. And I would say that don't go quarter on quarter because a large part of the weakness and bad results and such all is all there. Their earnings, their transmission into a 12% EPC playout are very, very strong. They are the lowest cost MEP player in the world. So SW Solar is my dark horse play for the next year and beyond.
Okay, there you have it. A lot of recommendations and we will be digging, probing and getting a lot more. But
Sanjiv, any opportunity you think within cement?
Well, Aisha, I have been on record. Ultratech has been my biggest holding. I've been telling you to buy ACC, Ambuja, both on the back that there was hardly anything on the Adani case. And both those companies combined owned about 58 million tons of capacity. So I would still go with ACC, Ambuja. You can add Shri Cement over there, given that pricing power is very strong for them and their cost is the lowest not in India, in the world. But I would stick my neck out that Ultratech is headed to 10,000 and beyond. So stay with market leader as a vested interest. Both ACC, Ambuja and Ultratech are in our portfolios. And we are very, very bullish on that entire space.
Okay, fair enough. And I'm curious to get in your take as well, Sanjiv, as to where you're seeing opportunity within the entire auto space, given that it's the first of the month. We'll be anticipating the auto sales numbers. Take us through some auto ancillary top bets as well as auto.
So clearly Ashok Leyland, and I was at on record 165, 168. It hit 181 yesterday. I think 225 is very much on the card. It is not just the Indigo, it is the bus which travels the passengers from the airport to the terminal. All that is blue is Ashok Leyland. 53% market share in the bus market and raring to go. And their EV foray is doing extremely well. So Ashok Leyland in the CV space. Second would be Maruti in the four-wheeler. No question that how they are expanding their new portfolio, and the weighting is amazing. And I think their margins may be arguably in this quarter at the highest. So Maruti headed for 12,000. And last but not least, I have been an advocate and hold Bosch from 12, 13,000. 25,000 was a joke last year, but that's very much on the card. So stay with the market leader. You can add an Apollo tire. I think that would be a very, very good proxy given that rubber prices have again softened and there is hardly any Chinese import. So Apollo tire can give you another 10% from there. However, as a caveat, these are all stocks hitting new highs. So do a little bit of diligence, but buy some now and wait for corrections to add more or do a sip.
And Sanjiv, were you lucky enough to get in on the smasher debut of the year, that is Tata Technologies, and what did you make of the stellar listing and moves that it made yesterday?
Well, no question, euphoria, and that is telling you that quietly we are in a broader market and people are not even, acknowledging that. So I think Tata Tech listing was a superb listing. But I think now with Tata Elxsi and a lot of the other names trading cheaper and at less market cap, which have a very, very strong proven record, I would not chase this stock. Let it go to people who are delving into that. I would still stay with some of the large cap plays which are giving me much more reasonable comfort on owning. HCL Tech has been my top pick over there. I still think HCL Tech is headed to 1500, and I would add a persistent and a Coforge on declines.
So let's look at Tata Tech IPO, let's look at IRDA IPO, where they are and where the valuations are stacked up. Let's go forward, let's look at Tata Tech IPO. It has made history, and A, it was a Tata Group company, B, there is excitement in the IPO market. But at FY24, which is the current year, 2 quarters already in, Tata Tech is trading at a P multiple of 77, KPIT 67, Tata Elxsi, which in a sense was like this jumbo mover which surprised everybody in last couple of years, is trading at 63 times, L&T Tech 36 times. Yes, you can argue back and say, okay, the growth rate is different, margins are different, it's a Tata Group company, but you got to compare apple and apple, you cannot compare apple and oranges. My limited point here is that the approach should be very simple. You do not want to chase the stock. If you own the stock, hold the stock. You don't sell the stock because it has run up, but just because the stock is from a Tata stable. Ultimately, the question you got to ask yourself is that can you make money if you buy a stock with that kind of an underlying growth at 80 times? The answer to that, well, maybe no. I'm not saying that Tata Tech is going to fall and is going to collapse. I mean, it's not going to go the consumer tech and the fintech way. But at this juncture, to chase the stock and to assume that you're going to make extraordinary returns, well, that's not what history has taught us. IRDA, flip it about. There the story is very different. It's trading at about 1.8 times, PFC 1.2 times, REC 1.2 times. It's reasonable. I can argue back and say, and which we argued with Sanjiv, with Bhasin Saab yesterday, that why should one not buy SBI or HDFC Bank? Well, I think the growths are different. There is a very unique advantage this company has, that it's going to become a mini Navratna soon, and it is addressing an area which frankly a lot of big banks will not be able to address directly. So there's a niche premium, there is a bit of a valuation advantage. You add all that up. If I have to do a like-to-like comparison between Tata Tech and IRDA, I would say IRDA is looking better in terms of the valuation approach. So Bhasin साहब एक कल phrase use करी थी पुरानी हिंदी picture की, IPO market में क्या हो रहा है, and the phrase I used was सब chance पे dance कर रहे हैं.
I agree with you, निकुंज, चांस पे डांस कर रहे हैं क्योंकि माल ही नहीं है. जब आपके पास माल लेना था तो आपसे लिया नहीं गया क्योंकि सबने यूएस और अरे यूएस मार्केट ही has gone to new highs or almost there. And why are we doubting this rally? Please keep your eyes and ears open. The FIs are no longer the driving force. It is the local retail investor. He is lapping up whatever good stock he is getting, even though it is at a premium. You are right, chance पे dance है, क्योंकि opportunity मिल रही है, लेकिन कल जिसने IRED में भी 51-52 में लिया, वो भी 87 रुपए डबल पे बिका. So I am of the opinion there is a lot of fraud maybe in the IPOs because there is chance over there, but you have to be little bit watchful. But the bigger market picture is simple. Nikunj, you are getting lot of opportunities. Look at stocks, you know. आपके याद मैंने याद है 35-40 रुपए में कहा NBCC is a no brainer. नहीं चला 2 साल. Yesterday it hit a new high of 76. Now it's looking good for 100. So there is a lot of valuation comfort in a lot of businesses across the board, PSUs, power, railways, which are giving opportunity. Only you have to wake up and smell the coffee. The broader market is where I would be very, very comfortable with a Kotak or an SBI and HCL Tech to put my money.
Wake up and smell the coffee, क्या बात है, अभी coffee खत्म ही करी है. Other stock which is revisiting, or the other group which I think is worth revisiting, are OMCs. We don't talk about it. Oil marketing companies. Let's look at a one month change here, and 57% higher for HPCL. HPCL is 37%. 1 month change is 37%. So out of that 50% change, 37% has come in last 1 month. Flip it around with BPCL. Of course, HPCL has this trigger that they are looking at divesting their lube business. But BPCL last 1 month, 22%. Batin sahab, ye kya ho gaya? Nothing has changed for them. But stocks have come back.
Correct. And that tells you that refining margins have arguably been the best. Results were very good. And the undoing has been the cheap Russian oil, which they've been getting at a discount. You didn't have to make tom-tom and advertise, but quietly they were doing that. Plus, they process harder and softer, both types of fuels, rather than Reliance, which just processes hard. So that has been the changing difference for IOC. IOC, you didn't mention, 5 rupee dividend and almost a 30% gain. So IOC, HPCL, BPCL are still looking strong. And like I said, it's the whole basket of PSUs which are duly getting their recognition after many, many years. I am very, very optimistic that some of them will still have more steam. And that is why the PSU basket or the CPS ETF, I've suggested this for the last 4 years. That is the best conduit to buy 12 basic stocks if you are looking. Don't chase the new stocks at new highs because you have the fear of losing out. But if you chase an ETF, that is the CPS ETF, it has a comprise of about 12 of the best blue chips of PSUs. But I still think HPCL, BPCL, IOC are headed higher.
They headed higher. I mean, I'm trying to understand that this is a sector where you may say that the spirit of true deregulation has not been followed. Oil right now is manageable. But if oil goes higher, we've seen that how oil marketing companies have to bear the burden. I mean, the government has gone on record and said that bhai, ye to achhe citizens hai, somebody has to be a good citizen when there is a problem. So right now things are looking good. But if crude goes higher, they will not get their bit.
Agreed. Nikunj, but that has been a constant foray. In the last 2 years, at least, there has been market dynamics on crude and diesel pricing. And government has not interfered in any way. So there has been a pass-on effect. Yes, the weaker dollar makes them little exposed to the FX fluctuation, but their margins and their gross refining are even done better than Reliance. So I am in the camp that markets are not looking at that broader and that 20-year-old picture of crude at 80 and 90. Look at auto sales. Autos are doing the best when crude is on a high. So I think growth is back. The Indian normal, जिसे कहते हैं middle income citizen is spending where he wants to. And like you said, if December is a robust month, then crude oil consumption and so on is very, very strong. So distillates are doing well. GRMs are at a high, and I think that that Russian imbroglio has played out excellently for the OMCs in India.
Okay, Sanjiv, good to have you on board. Thanks so much for taking time out and joining in.